Me and Dustin, we're
Safe.
going to go to our property on Monday.
Who's that?
Hey, look at that. That's awesome. Way to go.
Nice.
That's what the group's all about, getting people connected and creating an opportunity for people to work together. And whether it's mentorship, just getting a question answered, or actually partnering and doing a full deal together. I'm very excited for you guys and looking forward to seeing what you guys do. But yeah, I think it's been a good start for everyone to, network with each other and get to learn a lot of useful information, and from the different campaigns and things we've done so far. Tomas, have you gotten any hits from that campaign you did?
No, so the update I gave last week is that I did not, but fortunately, though, Ruby did on his mailing campaign. I don't know if he's on the call or not, but yeah, that's kind of the update with that.
Nice. I know I took a lot of notes from the stuff that you talked about because I use PropStream as well, so that was nice. Does anyone have any other, data sources that they use or softwares that we haven't talked about on the call?
Hi guys.
Hi, how are you?
Hi, I'm good. I use RealFlow just because I got that subscription. I've had it for a while, and you can also stack lists with them, kind of like batch leads, I guess. But I don't know why right now. I don't know if it's because of COVID. There's no pre-foreclosures on there, like any zip code that I try to pull up. So I don't know if there's some kind of legality that you can't target that audience, but yeah, they've removed that feature. I thought it was a bummer. Yeah, that's it. It's been good though.
Since everyone's been giving extensions, I know on mine I've got 3 months now, another 3 months if you want to use it. I don't think they're going to list that now because they can't foreclose at this point anyway.
Okay.
I've ran into that issue before. Whenever I'm trying to pull a new list, say for pre-foreclosures, even though this answer may be like no shit kind of thing, but definitely make sure you didn't filter something that has kind of taken away all your records that you would be getting on a normal pre-foreclosure list. Because I know sometimes when I'm using PropStream and I'm trying to pull a pre-foreclosure, I will just go and I'll try to make it super specific, and I'll accidentally filter something, which will basically take out all the data records and all that stuff that I could pull normally. So just make sure, just go back to all your filters and make sure that you're not filtering out or setting up a setting or a filter that's going to actually limit the results that you get.
Yeah, that makes sense. I'll check. It's just, I mean, a couple months ago, I was able to pull them up, but I mean, just, a zip code and pre-foreclosures, I think that's it. But no, not as of lately. I can't do it. So I wonder if due to COVID, they just kind of took that feature off. I don't know.
Very possible.
You can definitely go to your county. Yeah, it definitely could be. Yeah, I also think that definitely could go to your county and pull the records.
I'm gonna check again right now while we're waiting.
They probably didn't want to be the one company that gets like singled out with someone writing an article about how there's this company that allows you to like go and just single out people that are in foreclosure or pre-foreclosure, because it could be really bad PR for them right now.
Yeah, true.
Possibly.
Mm-hmm.
But that's just hearsay and hypothetical thoughts. Cory, how you doing? You ready over there, stud?
Guys, I gotta restart my computer because my power. Yeah, like we'll start with the needs, but just wanted to say what's up real quick before I gotta restart my computer. I'll go hop over to Layla's screen while this thing's restarting. But Kiko can't make it today. He'll be on next week. But today I just wanted to kind of give a presentation which I've done before, and in fact I just did this with T's group. But I think it's important information, and basically I wanted to show how we are able to control millions of dollars worth of real estate and compete in high price point markets, or, you know, in different markets with none of our own money in, right? And it's actually not as hard as, you know, people think to bring cash in and raise capital, but it has to be done the right way, which is what I'll talk about today. I see Bo on here. She was on the other call. So I apologize, Bo, if you've seen this presentation already, but feel free to, you know, ask any questions as they come up. Let me restart my computer. And Alex, can you lead us with leads, needs, and good deeds?
Yeah. Let's take it away there, guys. If anyone has a lead or a need or a good deed or anything that came up from one of the last calls, we'd love to hear about it right now. You know, it's open floor. So with that, does anybody have a need, a lead, or a good deed? I have it done. I'll start it off. I got a need. $400,000 opportunity. It's not backed by real estate. It's shares into a company. It's a pretty unique opportunity to get into an alternative investment. It's completely different, off the wall, but very, very interesting, very cool. So if you're interested and you want to hear more information, send me an email or call me. I'll put my information in the chat, and we'll just keep it at that. Now, who's next? I started us off. I knew someone was getting ready to go. Tomas, what do you got?
Yes. So I'm curious if anybody is like a prop stream sensei and knows the system really well.
I don't know the system really well, but I can get us on with somebody that works at PropStream to do a demo. We could actually probably bring somebody from PropStream on to the call maybe and have them do a demo of their software if we would like. We'll have to get a
Interesting.
vote.
Yeah, that would be cool. Yeah, because what I'm trying to learn how to do right now is kind of learn data management upkeep. So I understand how to pull all these lists for, you know, liens, pre-foreclosures, high equity absentees, but I'm trying to figure out how often PropStream and its database is updating those lists. So not only do I know how to pull the lists, I know how frequently to pull them based on the times that they update it. So I can be the first person in the door. So that's kind of been something that I've been trying to work on lately and trying to figure out. So yeah, if anybody has any info on that, would love to talk.
I don't know if anyone has any info directly on that, but I bet you we can get somebody from PropStream to come on our call and do a call with us and hopefully walk us through the software and, you know, teach us some tricks of the trade and then also answer all the questions that we can come up with. So I think that would be a good thing. We'll work on getting that done.
Yeah, let's do that. That's cool. Thanks, guys.
Anyone else?
I have a lead. I have two leads. One, they're both here in Washington. One in Bonnie Lake. It's a mixed use / commercial lot. The owner said it has potential to build 9 townhomes on it. So if you're a developer or builder and you're interested in that, reach out to me. I'll send you the details. I also have a lead for a single family flip here in Puyallup, Washington. 3-bed, 1-bath. I'm in the middle of negotiating with the seller right now. He's very motivated. So if you guys are interested in that, reach out to me. I'll send more details.
Thank you, John. I appreciate that. I'll be sending you an email because I might have somebody for you.
Cool. Sounds good.
You want to go ahead and drop your email in the chat box, John?
Yes.
That way everybody can have access to it real quick. What do you guys think of the market right now? You know, are you guys looking to do a whole bunch of deals, or are people still waiting on the sidelines? What do you think with the numbers and COVID spiking? Since we don't have a whole bunch of leads and needs, let's pivot the conversation a little bit, see if anyone got any input on that.
I noticed that for Maui, we still have a lot of people who are qualifying for loans. Open houses are happening and are super hot on the market right now. A few, I would say, smart realtors are properly pricing their listings and are getting bidding wars like the day of it going on the market. So at least for Maui, it is still, I don't think it's been quite felt yet. We are definitely getting ready for big hits in the next couple of months. So for Hawaii, there is, I'm not sure if it's a rumor or if it's been confirmed, but now that the 600 weekly stimulus for unemployment is ending this month, the Hawaii government is stepping in and bringing $100 a week. And a lot of people are, just really, really concerned for very obvious reasons. So I think that for Hawaii, we might see something in a couple of months, or maybe for Maui at least, we might see a spike in a couple of months. I'm not sure, but yeah. So as far as the current market for Maui, it's still up there. No, not very motivated sellers yet. I don't think COVID has affected Maui quite yet.
I've
Okay.
go ahead.
Yeah, I was saying, has anyone had any appraisals done or BPOs and seen the values start to come down yet because of COVID?
So I haven't, but Zasha, who's usually on the call, she's super busy today. I'm getting ready for an appraisal. She's got an appraisal, I believe, scheduled for the end of the month. So she's kind of like, she's doing a renovation of this property, just trying to get her highest dollar really. But she just spoke to the appraiser yesterday, and as of right now, things are still okay for Maui. Like they haven't seen a drop.
To give you guys a little bit of advice, what we've been doing is preparing the appraisers and the AMCs, giving them as much information on the property as possible, sending them comps ahead of time, because a couple of them came in low and now they're back to where they should be with us, just by giving that little extra work. So it may take a little extra effort, but if you don't, you're going to get buried at the end and surprised.
Yeah, we definitely don't want that. Getting a good value is key to being able to get the loan approved and moving forward.
Yeah,
How
this
we
is,
doing,
and it's a
Cory?
burr, so she's gonna need the toppest dollar on that one.
I had a property appraised 10% above its purchase price. I'm buying something in Gatlinburg, Tennessee, and it was appraised 10% higher than what I'm buying it for.
Nice.
That's awesome. That's
Great,
always
yeah,
appraisal comes in good.
excellent news, Nadal.
Yeah, thanks.
Okay, guys. Sorry about that. Oh, I'm back. Our fire alarm here at the office was kind of going off, so good thing it stopped. I don't know what that was about, but sorry I missed a little bit of the leads and needs. So there sounds like there wasn't much. I'm sure there's people out there that's got something. Everybody needs something. So let me try to think. Let me see who's on the call. Call you guys out. The people shame. Everybody's shame. How come?
What about anything somebody needs? Is there something anybody needs?
Yeah. Who's got deals over here? Oh, I see Daniel Kong's on the line. What's up, Daniel?
I see Caroline in the chat. She's trying to raise $150,000 in gap funding on Oahu. So she put her contact info there for anyone.
I might have a need actually if somebody has some advice. So I bought a property about like 3 months ago, and then the tenant is just like, he's just not leaving, and so the previous owner is just not leaving. So I'm trying to I don't know what my options are as far as I know there's a moratorium on evictions, but I don't even know if you can even evict like a former seller or like how that works. And so if anyone has any advice or like some thoughts on how I can get this guy out of the property so I can start rehabbing it.
So
Where are
I
you
don't
located
think
at?
I'm doing. Sorry. I
No,
have
you're
a
good, actually.
seller
Go ahead.
in Eva who needs to give his tenant notice, and it's not because she's not paying, which she's not, but we spoke with the Board of Realtors and confirmed, and with our broker, that you still can give them notice to vacate because you need to sell. So you should be able to still give them notice to vacate and go through the eviction process if you prove. I don't know for sure, honestly. We're going through it right now.
Okay, thank you.
Yeah, it's kind of hard now because they're passing, these they're it's going back and forth, right? Whether or not they're gonna, I don't think right now that you can really evict a tenant or banks foreclose on homeowners and take properties just because of what we're going through. So,
Daniel, have you tried the? Sorry, I was gonna ask Daniel. Have you tried the cash for keys route?
I haven't yet. So that's kind of like my next on my to-do list to try that and see what happens over there. So yeah.
Yeah.
What would be like a good? What would you guys recommend for like? What's a good number to offer somebody for that?
Couple months rent's worth, for his
rent.
situation, I'd say.
Okay.
Yeah, I mean, I would say start low. I would say start low and just see what type of response you get. Because you never know. Sometimes it'll take a few $100s if that's all they need, or maybe it's a few $1,000s. But yeah, just start low, feel them out, and then move up if you need to, or if you think, that'll
I
make
would
a difference.
even look at the obviously the rents in that area for maybe if it's one person, like something that just one person can get into.
Mm.
So you can use that as your argument.
Okay.
If it's not what they're looking for,
Yeah.
This is in Hawaii, this property?
Yeah, it's a condo in Waipahu actually. I mean, the guy blocked my number, so then like I have to actually physically go to the thing and knock at the door, and if he doesn't let me in, then like there's nothing I can do. So I mean.
Right. Well, yeah,
I'd say like Daniel, leave him a note or put it in his mailbox, and just tell him to contact you. You have some money for him.
Okay, that's a good idea. That's a good idea.
I think enough for first month's rent and deposit so he can get another place and then maybe cover his costs for moving or something like that. That's going above and beyond,
Mm-hmm.
And then if you run into problems, Daniel, then call me because since we're on the loan for that, right?
No. This is like another one. It's
okay.
I mean, it's yeah. So
we'll still help you.
Thank you. Does anybody, somebody? I need some Hawaiians to, that some guys know to help me evict this guy the Hawaiian way.
The New York way may work also.
Chris over there. You got Chris Coloma, but the guy you're in Vegas though.
I know some New Yorkers for you, Daniel.
That's what I'm looking for. Anybody got any Hawaiian contacts? Let me know, and I got some money for them too. So.
I think all those guys just went to jail.
Right. Yeah. There's a big
right,
over here. But okay.
Thank you guys. I
so
appreciate it.
Yeah, no worries. Since we'll get going. Sorry for the delays, but if you guys have anything else, put it in the Facebook group, and we're trying to watch the Facebook group a little more because what I don't want is like people just copy pasting, their stuff in our group, and I don't want it to be like another one of those big groups that nobody really looks at because everybody just blasts out copy paste stuff. So if that's you guys, if that's you on the call, then please at least address the group and just know that this is a different group that we're trying to cultivate here. And so if we see anything that's kind of like just a copy paste, no effort, then we won't approve it. We won't approve the comment or the post. So we love to see people's results, and listings when they go to market. So we have no problem showing that off for you, and celebrating with you. But at the same time, if it's being posted in a bunch of other groups and there's no effort to address the group our group personally, then we won't approve it, right? Because we don't want it to be just another spam group like some of these other ones. So just putting that out there.
Cory,
With that
Cory,
said, I'm gonna,
I wanted to
oh, yeah.
mention, that's a good point. There was a wholesaler that posted a couple deals here in Hawaii in the group in the past week. And I know those wholesalers personally, and I think they had a VA just post some information without an address. And so, I sent them a polite message just saying, this group is all about transparency, honesty, authenticity. And so, next time when they comment, provide a little background information, be as transparent as possible, know that this group is about building each other up. And so I think they took that to heart. And so just wanted to, relay your comments. I think everybody on the call understands, but yeah, just to be mindful of that going forward, I think is great for the group.
Thank you so much, John. Really appreciate that. Yeah, because I know which one you're talking about, and too, like if you're gonna post a deal in the group, then post the deal. Purchase price, estimated renovation budget, ARV. Let's so that we can look at and we can ask questions together and break down the deal together. You know what I mean? Because we don't need the sidebar conversation. Let's look at the deal together. We're in this together. If we need to make the group private, we will. I don't care about growing big. Although the more people we have in here, the more resources that we all have together. So there's a balance there, right? And at the same time, the culture is more important than the size for me. So thanks, John, for taking care of that. And I did see that deal, and that's why I want to see the numbers too, the estimated numbers, and then everyone has to verify on their own, because after looking at the deal, it's not a good deal, and I wouldn't recommend it to anybody in the group. You know what I'm saying? So if it's a $30,000 or $40,000 net profit for Hawaii, that's not a good deal, in my opinion. It's a risky deal, and I don't want anybody jumping in on something like that. And I'd love to have a conversation with any of the wholesalers who did put that in there. But next time, if you guys got something, just put the numbers on on there so we can all look at it together. And sometimes we just make mistakes, so there's no problem. But main thing is we can be transparent from the start. So with that said, if you guys don't mind, I'm gonna jump into my presentation here, and we can go over this presentation is for financing equity deals, right? So fix and flip, ground up construction, to buy, build, sell, or anything, possibly like bird deals, right, on the front end. So one second. Do I have the controls? Oh, I do. Okay, here we go. Actually, okay. All right. Can you guys see that?
Yep.
Okay, perfect. Okay, let me know if I'm cutting out or anything. Okay, so basically for us, we're in high price point markets like Seattle and Hawaii, right? So there's a lot of money that we have to bring to the table in order to do one deal. Sometimes we purchase properties like at $1 million, right? And our renovation budget might be $300,000. So if we couldn't leverage and utilize some of these tactics, then we could probably only do a few deals, like a handful of deals at a time, right? So today I just want to talk about some of the main strategies that we use to finance our deals. And this is even important, I feel, for wholesalers out there. So they understand the capital stack that the investor has to, the options that the investor has, so that the wholesaler is aware of extra costs that they should account for when they're running their numbers and when they're locking up deals under contract. Okay, so the four kind of main strategies I'd say that we use is hard money, private money, JV partnerships, or DEBTQUITY. So JV partnerships we haven't really done in a while, but it is a strategy that is useful for certain situations. I think we even had, I think it was Daniel, you had one that it seemed like a JV partnership was probably the best route. But there is some things to think about before going into a JV partnership, especially with a homeowner. So we'll get to that. But first of all, the main thing when you're raising capital, especially when you're trying to find and source hard money, is you want to know the terminology and be able to speak the same language, right? Because some of these guys are, bankers on Wall Street, right? So they're not really in our space where we speak a different language, right? So some of the main terminology is like LTC or LTP, which is loan to cost or loan to purchase, and LTV, which is loan to value, right? Because the lender is never gonna give you 100% of the financing, right? Unless they're a private lender. If it's an institution and you're getting it from hard money, then most likely you're gonna get funded up into a certain value or cost point, right? So loan to cost or loan to purchase is basically how much they'll lend to you of the cost of the asset or the purchase price, okay? And sometimes we utilize LTARV, which is loan to after repair value, right? So for us, our max is 75% of the LTARV, right? So we'll lend up to 75% of the ARV, so the after repair value. Okay, the next one is the interest rate, right? I think we all know what the interest rate is, and then points, right? And sometimes even basis points. If you're talking to a hard money lender, they may refer to it as BIPs or basis points. And one basis point is basically 100th of a percent or 100th of a point. Okay, so if it's half a point, then that's 50 basis points or 50 bips, right? If it's a quarter of a point, it's 25 basis points or 25 bips, okay? And then the other things to understand is what type of recourse do you have on this loan or this investment? So there's full recourse, non-recourse, and sometimes lenders have what we call bad boy recourse. So I'll start with full recourse. Full recourse means you're personally guaranteeing the loan. Okay, so in the worst case scenario, if a lender has to, if the deal goes bad and a lender has to foreclose,
Hey, Cory,
then first they take the asset.
Cory, are you talking off of the slides? I only see the main slide.
Oh.
Slide 1 is what we're all looking at, I think, right now.
Can you see the terminology screen?
I don't. Do you guys?
No, I just see the front page.
No, I just see the first opening slide.
Oh, okay.
Cory, you paused your screen.
Oh.
I don't know what button it is to unpause it, but there's like a pause feature.
Can you guys see it?
Maybe stop sharing your screen, Cory, and then
Yeah,
reshare.
I'm sorry, guys. Hold on 1 second.
There you go.
That one?
No, that's not the one.
That's not the one?
No.
Oh.
Go back to the
Technical difficulties. Okay. Where are we at?
share screen.
Okay. Share screen.
It's the other one.
Which one? This one?
Yeah, that's the one you're presenting off of.
Okay. Can you guys see that?
Yeah.
Yes.
Yay.
Okay, sorry about that. Okay, so full recourse, non-recourse, and bad boy recourse, okay? Thanks for that, Alex, by the way. Full recourse is you're personally guaranteeing the loan. That means if the lender has to foreclose and take the asset and sell it, if they can't make their money back, then they can come after you. There are other recourses to come after your personal assets, right? Like your house, your car, and whatever else you own. So non-recourse means that you're not personally guaranteeing it. So their only recourse is the asset that they're collateralizing, okay? And bad boy recourse is a loan or an investment that is collateralized, but it starts as a non-recourse loan, okay? If they find that there's any type of negligence or fraud, then the loan will convert to a full recourse loan. That's what bad boy recourse is. Okay. Interest reserve is a term that you should understand and know, especially in these times, if you're raising capital and if you're getting hard money financing, because a lot of lenders who are tied to the capital markets are requiring an interest reserve. So an interest reserve means you pay a certain amount of months up front, and they keep that on the side in like a escrow account to cover your interest payments. So it's basically guaranteeing that the lender will get paid every month, right? So if they require a 6-month interest reserve, then you have to pay 6 months worth of interest up front. And if you are out of the deal within 4 months, then you'll get the 2 months back, okay? Or you should, right? Then there's non-Dutch interest and Dutch interest. So Dutch interest basically means you pay interest on top of the construction holdback, right? So most hard money lenders, when they finance a renovation, or if they say they're going to finance you 100% and your budget's 100,000, they're not going to just give you 100,000 up front, right? Because they have to protect their investment, because at the start of the project, that's when it's most risky for them. So as you start to put money in and you start to renovate the asset and reposition it, then the value of the asset goes up and the risk for the lender goes down, right? So that's why they don't just give you the full construction holdback up front. They need to protect their money. So Dutch interest means that you pay interest from day one on the renovation budget, even if you drew on the money or not. So even if you pulled on the construction line or not. Okay, so non-Dutch interest means you don't pay interest on that construction holdback until you start to draw. So this can be important, especially in markets like Hawaii or Washington or California, because sometimes the renovation budgets are pretty high. So if you're paying extra interest on $150,000 renovation budget that you haven't used yet, then that's, you know, an extra cost for you. So you definitely want to check with your lender if they charge Dutch or non-Dutch interest. Okay, and in many cases it's a plus or minus, right? Because if they're charging you non-Dutch interest, it saves you money, but it also means that money is probably not as liquid because it's being held in an escrow account, and they probably have to pull on a credit line, right? So it may be a little slower. Okay, so there's pluses and minuses to Dutch interest and non-Dutch interest, but the main thing is understanding. And when you're talking to a new lender or a new investor, you want to just use these points to ask them to understand what type of loan product you're getting into, but also so that it can make you a better negotiator, right? When you're sourcing hard money financing or private money, okay? The last term here is pari passu, which basically means shared. So most of our gap funding, we put in a second position mortgage, which is pari passu, so shared. That means that the lenders that are in second position share second position, okay? Okay, now I can't switch screens. Next. Okay, so when negotiating hard money, you definitely want to ask, like, what's the max LTV? What's their interest rates roughly? What's their points? Do they charge Dutch interest or non-Dutch interest? What type of recourse are you looking at? And what is the draw process like? Okay, when I say draw process, that's the construction draw process, because sometimes that can be the biggest headache. You know, you might wait 2 weeks for your money, and 2 weeks is just death to a project sometimes, right? So you don't want to lose momentum, and you don't want to lose crew, and that's happened to us many of times dealing with different hard money lenders. So that's something you want to definitely understand, is how does the draw process work, and roughly how long does it take them to fund you when you request for a draw, okay? So understanding the terminology is very important to help you negotiate when you're raising private or hard money financing. Okay. Now private money. So that was hard money. I'd say 95% of our deals are financed with hard money in first position and private money in second position. Okay. You definitely want to check with your hard money lender if they allow second position liens on the property, because a lot of them do not. Okay, so just keep that in mind. Okay, so private money, we refer to this as gap funding, because even though we're getting primary financing from hard money, we still have to bring money to the table, right? And if we're not going to bring that money out of our pocket, it's got to come from someone's pocket, right? So we have private investors, and there's many of them on this call, and there's many of them, you know, in the industry, in your markets, who are looking for investment vehicles just like this. Okay, so a lot of people, their biggest hurdle is raising private capital, and I think a lot of them are unsuccessful because they're not doing it correctly. And I'll show you guys what I feel is the best way to raise private money. Okay, so first thing is understanding private money. So, and its role. Now, private money is someone who you may have a personal relationship with and who is not an institution and is flexible with the terms. Okay, so typically there's no monthly payments. They get paid a lump sum of their interest on the back end. It's typically non-recourse, and in our market, the rate of return is basically 10 to 12% interest, APR, okay, and no points. And as I mentioned earlier, private money, we usually put them in second position, pari passu. Okay, so if you look at the little chart on the right-hand side, this is in our spreadsheet. So basically, this shows us how much we need to raise in private capital, right? So, because we need to put, well, in this example, it says 10% down. So that means we got 90% of the purchase price, or LTC, LTP, from hard money, right? And so we have to raise 10% of that for the down payment, just for closing. And then we have closing costs, right? Which is title, escrow, any assignment fees that if you're buying it from a wholesaler, points to the lender. So all that gets accounted for on the front end. We have to bring that to the table either out of our pocket, or we have to raise it in gap financing. Okay. What the other thing we have to raise is loan payments. So we have to pay interest to the hard money lender every month, right? So we usually raise for the entire length of the project. So if the project's going to take, we project it's going to take 8 months conservatively, then we'll raise 8 months worth of interest reserve. Okay, so as for us on the loan side, on the hard money side, whenever I hear an investor kind of complain about paying the interest reserve up front, that's a red flag for me. Okay, because that means that, because when a hard money lender asks me as a borrower to put in a certain amount of months of interest reserve up front, I have no problems with that because I have that on me from the start. Okay, so as the hard money lender, if somebody is kind of complaining about having to pay interest reserve up front, that's a red flag for me as the lender, because that tells me that they're not quite doing deals or preparing for a project like we do, which means that we prepare for interest payments to the hard money lender for the life of the project. Okay, so, and I recommend you guys do that too. Okay, the other cost is holding costs. This is miscellaneous holding costs. So costs for water, electric, maybe taxes and utility, taxes and insurance paid, accounted for the life of the project as well. And then construction in arrears. So remember when I said we don't, as the hard money lender, even though we finance it 100%, we don't just give you 100% of the budget up front. You have to put the first tranche, right? So if the budget was 100 grand, then perhaps you have to bring in the first tranche. So perhaps you want to do 4 draws at 25,000. You have to bring the 25,000 up front to start the construction process before you get reimbursed, right? Once you're done utilizing the 25 grand and you've done all the items on your scope of work, then you file for a draw, and the fund control company, which is a third-party company, will hire an inspector to go out and take pictures and do a report just to verify that all the items that you spent the 25,000 on has been done. And if everything looks good, then they'll wire you the 25,000 back, into which you recycle that into the project. Okay, hopefully that makes sense. Either way, you have to account for raising or bringing out of your own pocket the first tranche to start the construction, which is number 7 here, construction in arrears. Okay, so these are the items that we have to raise in gap funding, right? So in this example, it's about $189,000. So how do we get that, right? Because raising private capital when you're first starting out is not easy because you don't have a track record. So you may have to maybe tap someone on the shoulder and ask them if they can partner with you, just so that you can ride their experience and you have someone looking over your shoulder while you're raising private capital for the deal and while you're going through the execution phase of the project. Okay, so the way you raise private capital effectively is it comes down to answering 2 fundamental questions about investing. So basically, what is my risk and what is my return? And is the return worth the risk? Okay, if you can answer those 2 questions before the potential investor has to ask you, then you win. Okay, it's simple. You have to answer these 2 questions before they ask them to you. Okay, so, and here's why. Because when you look at it, what we offer as investors to private lenders is superior than most of the investment vehicles out there that people are relying on. Okay, so when you compare the 2, right, we offer our lenders 10 to 12% interest. That's exponentially higher than the average retirement fund or retirement account that's being utilized for the average person. Okay, so when we say, what's my return, we win. Okay, we beat most investment products out there at 10 to 12% APR. Okay, and when you look at, okay, well, what's my risk? Because you can get the highest return ever, but if your investment, your principal investment is at risk of being lost, then what does it all matter, right? So the next question to answer is, what's my risk, or what type of security do I have? Well, private lenders typically get a promissory note, a mortgage that secures their money, their investment, and is collateralized by a tangible asset, which is real estate, right? So a lot of times, the amount that is being invested is far less than the value of the actual property, right? Now, if you're in second position, that is different, right? You have to consider, well, what's the first position lien amount, and what happens if, has to be a foreclosure or something. Well, in that case, then you will have to let the first position lender get paid back, right? Because you're in second position. So you have to, it's the private lender's responsibility and your responsibility as the investor to explain the security. And as a private lender looking at a deal, you want to make sure that there's enough equity in the deal that in the worst case scenario, you can get your principal back even after first position. Okay. So when it comes to security, you get a promissory note and a mortgage, which is recorded against the property as your collateral, right? So you have a tangible asset as your security. When you compare that to the average, maybe mutual fund or 401k that might be riding the market, the stock market, there's no security, right? I mean, if the companies that your money is invested in goes down and the market tanks, then you gotta hope and pray it comes back, or you cash out and you cut your losses, right? There is no collateral. So on the security side, we win as well, right? We offer a promissory note and a mortgage, which is collateralized, that secures the investor's money, right? And then we also get property insurance, right? And title insurance, which secures the asset to which their money is collateralized on. Okay, so you basically have 4 instruments that are there to secure the investment as much as possible. Now, no investment is 100%, right? So that is something to also consider. You never want to promise anything to a lender. For one, it's illegal. So the main thing too, when you compare our lending products or our investment products that we offer to average everyday people, is that they have direct access to us, or they should, right? Like all of my lenders have my phone number, they have my address, they know where we live, they know where the office is. So if there's any questions or concerns, they can get a hold of me, right? So if you're investing in Amazon or Tesla, right? I'm pretty sure you don't have Elon Musk or Jeff Bezos' phone number or address, right? And you can't contact them. So that's another thing that's different that we offer. So looking at this from, the 30,000 foot view, we win in all angles. So why is it so uncommon, when sometimes when I am talking to a private lender or a prospective private lender, their biggest concern is that it's too good to be true, right? A high rate of return with more security. And so the reason why it's not, I think, as well known is because there's not as much investors out there that are actually finding deals and actually executing on them, right? So, but all of us on this call are all investors who are doing deals, and if you're just starting out, you will be doing deals with strategies and the knowledge that we're all learning together here. Okay, so when you raise private money, the biggest thing is the moment you feel like you're selling somebody on lending with you, you're doing it wrong. Okay, that's my opinion. It should never be about selling somebody on a private money opportunity, private lending opportunity with you. And why is that? It's because of all of what we just talked about, in that we win on both concerns, right? We offer a higher rate of return and with more security. Okay, so with that said, we shouldn't have to sell somebody on it. It's about educating them, right? So we don't want to sell anybody on investing with us as a private lender. We need to educate them, right? And address the 2 concerns, the 2 fundamental investing concerns, the questions, before they even have to ask. Okay, so, and when you're dealing with a private lender, know that you have a strong product to offer, and you got to know the value that you're bringing to them too, right? So the value is we offer a strong investment opportunity, right? And so one thing to remember as well is that not all money is good money. So if you ever, feel that a lender is just not ready to invest because you can tell they have a lot of concerns, then it's probably best to not take their money. Okay, and I made this mistake before, because you want somebody to trust that they're in good hands. And if they're not there yet, then that's fine. Don't force anybody or try to sell anybody on lending with you, right? Also, you should ask what's the source of the money, because you don't want to be taking in dirty money, right? So you want to kind of know, is it an IRA? Is it a self-directed IRA? Is it a HELOC? Is it cash in the bank? What is the source of the funds, right? And you kind of want to get a good picture. If you have a feeling that the money is, dirty, and they're trying to maybe launder it through you, then my advice is just to respectively turn it down. Like, I wouldn't go down that road. Okay, so sources of private money, and there's a lot more than this, but the most common is cash, cash savings, cash in the bank, HELOCs, personal lines of credit, self-directed IRAs, and even some people who are leveraging their life insurance policies, right, which is a powerful vehicle as well. Okay, so that's private money. Real quick, I'll go over JV partnerships. This isn't as common, but this is a JV partnership can typically work when the seller maybe can't get down to the price that you need it, but there's still equity in the deal, right? And they don't have the money to put up for the renovation costs to go to market. So in that sense, for example, let's say a seller or a person of equitable interest in the property agrees to partner with you by holding the property and allowing you to come to the deal with no cash to purchase it, right? You bring the funds to renovate the property, you bring the construction crew and you manage the project. That's the value you bring to the table, right? And the main thing though, if you ever enter into a JV partnership with a homeowner, is to take control of the asset and of the process, right? Like, ultimately you have the final decision-making power. That's what you need. Otherwise, I'd say it's too risky. Okay, so you can secure it with an operating agreement or a partnership agreement. Make sure it's signed and notarized. And then when the project is done, then there's an equity split, which is whatever you think is fair, and you can negotiate with the homeowner. And we can go over questions on that one if you guys have any. Okay, so DEBTQUITY, this is the last one, and this is a very powerful strategy. It doesn't fit all deal structures, but for the most part, if it's an equity deal, you can do a DEBTQUITY deal. Okay, so DEBTQUITY is basically a same thing as a private lender coming in. So they'll get a promissory note and a second position pari passu mortgage as their collateral. But then there's a third agreement, which is a partnership agreement, which secures their equity. Okay, so they're coming in as a debt lender where they get the same security as a debt lender, but they also get a partnership agreement in this. Okay, so to secure their equity portion. So the private money lender will receive the promised interest rate or agreed upon equity, whichever is higher at the end of the deal. Okay, so for example, Bob invests $100,000 at 12% interest APR. So that means that based on the interest alone for his $100,000 principal investment, he'll receive $1,000 a month, right? So let's say the project is expected to take 8 months and net $100,000 in profit. Okay, based on the projections, Bob is expecting to make $8,000 with his interest rate, right? Because it's going to take 8 months, and he makes $1,000 a month off his interest rate and his principal. So to calculate his equity, we divide his projected earnings from his 12% interest by the projected net profit of the deal at the start of the deal. Okay, so we divide 8,000 by 100,000 to calculate his equity. Therefore, Bob will receive 8% interest or 8% equity of the net profits, whichever is higher at the end of the deal. So hopefully that makes sense to everybody. So for example, let's say there was a lot of problems with the project. and the project took 12 months, right? And we netted 50 grand instead of 100. Okay. If that's the case, then Bob's interest, his debt position would be worth more than his equity position, right? Because now he's getting paid 8% on 50 grand, not 100 grand. Okay. So at 12%, he makes 12,000 because it took 12 months, right? Now, if the project goes good, and let's say they get out within 4 months and they net 150 grand, then now his equity is worth a lot more, right? So he gets 8% of 150,000, whereas he would have made 4 grand if he was just a debt lender. Okay, so this strategy can be very powerful because it's enticing to potential private lenders who understand what this product is offering. Okay, so basically they get the security and promised interest rate of being a debt lender with the potential upside of higher profits being an equity partner. So they get the potential upside of being an equity partner with the security of being a debt lender. That's why this strategy is powerful. Okay. So final words is leveraging 100%, which is what we do, right? We stack financing. We stack hard money, private money, and we use DEBTQUITY and partnerships. So we stack these options. So the more options you have and strategies that you know, the stronger you'll be. It's just another weapon in the the tool belt. So I'd say majority of our deals we finance with hard money and private money. Sometimes that's DEBTQUITY lenders and sometimes that's just debt lenders. Okay, so these 4 strategies, primarily the first 2 are the reasons why we can compete and buy properties in high price point markets without any of our money, our own personal funds in, right? And we can put personal funds in, but for one, it wouldn't allow us to scale like we have. And 2 is we want our lenders to have the opportunity to lend with us too and help them build their wealth, right? So it goes both ways. There's benefits both ways, and leveraging 100% can be very powerful in high price point markets where it's hard to scale. But we also have to remember that leverage can be a double-edged sword. And so you need to understand it and respect it, right? And kind of don't get crazy with just because you do have the option to leverage 100%, you still have to make sure you're getting into good deals, okay? So plan for the worst case scenario, and as always, have multiple exit strategies to protect yourself, okay? So that's it. Maybe we can just go through a quick round of questions, and I'll hand the mic back. Hopefully that made sense to everybody. Let me check the chat. Okay.
Did a great job, man. Great job. Great job. I learned a few things. I love the DEBTQUITY one. Because that was the first time I ever heard it was from you. And I think it's a brilliant concept to really allow investors and also the, lender and the client to, everyone to benefit the most possible. Does anyone have any questions?
Yeah, sorry, we went a little long, guys, but any questions in here? Did anybody? I wasn't keeping eyes on the chat, so if we can just go through it real quick, or somebody can just speak up if you have questions. I know there's a lot of equity guys out here doing fix and flip, so.
Cory, Monica here. I have a question. What's the process for just normal people like us wanting to be the investors as a private or a harmony with you guys?
Oh, what's the process if you want to be the lender, right? I think the first thing is to let people know. So like you're taking the first step already. Let people know that you're interested in lending, right? And you want to speak to other investors who might have deals. So like I forget who just said that they're looking for gap funding, but that's a potential opportunity for you. And you as the lender, you want to talk to who's going to be leading the project, right? And look at the deal itself. Double check their numbers. Like, what are they buying it for? Are you going to be in first position or second position? And what's the, ARV? And so you, as the private lender, it's kind of like the same thing as a hard money lender. You want to look at the deal and the person, right? You want, and that's how you mitigate your risk, right? Can that person execute on their plan for that deal? Right. So first you can look at the asset, look at the deal, make sure it makes sense, and then look at the person, right? It's kind of like Shark Tank. I don't know if you guys watch Shark Tank, but they always look at the deal, but more importantly, if the business or the deal is good, but if they're not, if the entrepreneur, they're not confident in them and they don't like the plan, then they're not going to invest with them, right? So I take the same approach as that.
Sorry, because kind of new on that. So, so say for example, I want to lend money. Do I come up with the agreement, or is there a template set agreement between the two, or would we go to a real estate lawyer or something?
Yeah, well, you definitely want to check it with an attorney if you want to. The investor may already have a note and mortgage that he or she uses that you can review and have your attorney review. We have our own promissory notes and mortgages, but if somebody else, if one of our lenders wants to use their documents, I'm not against that. As long as there's nothing unreasonable in it, then I'll use that. It's no problem. So it's kind of up to you, right? But most investors should have promissory notes and mortgages that they use, right? And if you guys don't have any, it's easy to find, but we have some that we can, let you guys use as a template.
Thank you.
No problem. Okay, I see a lot of people messaging me privately to put this, if I can put the slides up. So I'll put the slides in the files, okay? In Facebook group. Let's see.
Cory, there's Kapta had a question as well. Could you bring up an example of the JV partnership with numbers?
Yeah, I'd have to think about that. I'd probably have to write it down just to make sure it's accurate, but we can do that for sure. I'll put that down. Anybody else?
I think you covered it, Cory. Perfect.
Awesome. Cool. Well, I was thinking more on this. I mentioned this last call, but I think it'd be kind of cool, and maybe I'll huddle with everybody on the team to see if this is a good idea or not. But if maybe once a week on these calls we dedicate like 10 to 15 minutes in diving deep into one person's kind of career and where they are and what do they need, right? And just dissect where they are, and they can be and whoever that person is, we can choose every week someone new, just real quick, but it will be like a kind of a laser beam right through the heart of what they're trying to accomplish, and see if we can help solve their problems and give them a little boost to get to the next level. If you guys think that that's a good idea, I'd love to execute on that one. And I think just a quick 15-minute, segment every week with somebody new where we can all put our heads together and dive in and help that person and then move on to the next week, which next week might be you. You know, like what do you need? Do you need marketing strategies? Do you need someone to help you with financing? Anything, right? Because I think that's the point, is that what would be a shame is that we all come here every week, a lot of smart people, a lot of ambitious people who have a lot of resources, and then we're kind of all staying at the same level, right? I want to go to the next level all the time, and I want to be there right with everybody, side by side, you know. So I'd like to see if we can do that. Obviously, I'm good at thinking of ideas, and then sometimes like executing on them is not my strength. So feel free, you know, I'm not gonna have hurt feelings if somebody says it's not a good idea, but I'd love to put it out there to the group. Also, I want to welcome Lohi and Josh Hooper, who are on the call. These are guys that I'm working closely with. They're in college and they're learning. We're trading values here. So I'm helping to mentor them a little bit, and they're helping us with some of our back end stuff that we need help with. So they will be strong and savvy investors very, very soon. So keep an eye out. Say hi, guys, if you're still on the line. Unless you shame.
I'm here. How's it?
Where's your camera?
What?
I said, where's their camera? I don't even know what they look like. Come on, guys.
Oh, my hair is not clean.
Hey.
That's why you go surfing. Don't forget to come to the office today.
Yeah, 1:30.
Well,
Love it.
So while I go through these, just to make sure that I didn't miss anybody's question, does anybody have any? I'll bring it back to the leads and needs real quick, because I feel like we kind of didn't spend as much time to give people opportunities. Does anybody else, before we kind of part ways again for the week, does anybody else have anything that they need? Who's our wholesalers in the group? Who's only focusing on wholesaling? Kind of put your name in the chat.
What was that question? Well, I can't remember. I think maybe 2 weeks ago, I was curious more about, somebody mentioned the process of the pre-foreclosures are going to be not initiated in January. I was trying to like look more about that online, but how are you getting that information? I'm just curious if there's a specific resource.
That's me. So I got that through a group, a Zoom conference group that they holded with all the lawyers and all that stuff.
I see. Okay.
So they are going to be processing foreclosures in January, Dante?
The association right now, it's all being pushed back because of the courts and everything. It's all being pushed back to January, the associations.
Oh, okay. Well, that's something to keep an eye on, because when the foreclosure inventory starts to come into the market, then I think we might start to see some movement in the opposite direction of what we've been seeing lately. So just something to be wary about. I see Daniel over there at his project doing some work. He probably can't. I don't know if he can hear me. Where are you at? Obviously, that's not the one with the tenant.
He's ready to break in. He's coming.
Yeah, I saw Carolyn Durant said she's got some big brothers to help you get that guy out if you like.
I need that. Please. Let me
Give her email. You got to send her an email for it.
Chris, are you still in Vegas?
I don't want anybody to get hurt or nothing. I need some persuasion, and I'll give the guy some money with a little persuasion. I just need my problem gone. So I mean, I'm not about cash for keys and persuasion.
Just pay for my airfare. Maybe I can help you with that.
Chris will fly from Vegas to solve your problem. That's a trick.
The right way, though. The right way, legally, of course.
The right way. Yeah.
Yeah.
You're in the police department or sheriff's, Chris?
Yes, here in Las Vegas. I work for a smaller agency, though.
Oh, nice.
Yeah. So.
How is Vegas, by the way? Are you guys locking up again, or?
Yeah, seems like it. You know, we're rolling back to the early phases of phase 2. There's rumors, but not just rumors for now, about rolling back to phase 1. So bars closed down, restaurants already kind of phasing out to scale back, and even at work, it seems like the guidelines we're coming through is the same as what happened when we first started. So we'll see. It's going to be an interesting ride. We'll see what happens.
Yeah, it's kind of crazy. We're hopefully going to be going to escrow on our property out there, but it's a little scary. But let's before we part ways, on the next week when Kiko's on the call, let's give him a hard time for missing 2.5. We give him a hard time. He's having too much fun. I envy his life.
Right, Pastor.
He wishes he was on here. But thank you guys so much again for coming on Friday. Like, it really is the highlight of my week. I look forward to seeing like the same faces and the doll over there across the world still making it on. and everybody, you know, in different islands in the mainland, different markets. And it was Troy. It was you that came up with the good deeds. I was trying to think of who was that? The leads, needs, and good deeds. And now I remember it was you. So
That's right. Inaugural good deed, and it was to Kakoa. So yeah.
Yeah, I remember it was you now. So thanks for that. I love it. So, anyways, I'm gonna hang out for a few minutes after, as always, just to talk story with people who have time to talk story after. But other than that, I'll see you guys on next week and in the Facebook group. And you guys take care and go get them out there, and hit us. Let's work together and hit each other up if you need something. Okay. You guys have a good week. Thanks. Aloha.